We are standing at the cusp of a unique housing situation, a reverse bubble that's, it's been inflating day by day due to the persistently high interest rates. Today, we're going to delve into the recent data from Redfin, why a record number of Americans believe it's not the right time to buy, the top 10 markets that are booming, and the 10 that are experiencing downturns, and insights from economists on current housing landscape. According to TransUnion report, Gen Z seems to be, saying goodbye to that American dream of home ownership. Alarmingly, mortgage originations have plummeted to an all-time low, a whopping 59% drop from just a year ago. We're in a significant real estate downturn. By the end of this year, we anticipate a total of approximately around 4.2 million units. To put that in perspective, we haven't seen this number since 2008 financial crisis. But here's the twist. Despite the downturn, house prices haven't dipped. Taking Charlotte as an example, house prices have surged by 5.35% this year alone. During the pandemic-driven boom, the demand was so immense that we would have required 300% more inventory to meet it. Although inflation appears to be slowing, celebration might be a little bit premature. A staggering 73% of Americans now believe that homes are way beyond their affordability. This year has seen an uptick in trajectory in home prices. And contrary to the norm, we're witnessing a uptick in listings, especially as we move closer to the fall. A survey by Fannie Mae revealed a startling statistic that 80% of consumers feel it's a bad time to make a purchase, primarily attributing to the skyrocketing prices and high interest rates. There's a silver lining though. Pent-up demand is looming. With a record number of individuals aged between 33 to 36, we're looking at a typical age group for first-time home buyers. And many homeowners are eagerly waiting to sell. Their decisions are tethered by the current interest rates. An overwhelming 82% feel trapped due to their prevailing mortgage rate. Experts are keeping an eye on the 5% threshold, predicting that a rate dip will spur both buying and selling actions. This could trigger a surge in transactions along with the subsequent price escalation. Interestingly, the markets experiencing the most downturns are largely on the West Coast, whereas the thriving markets are predominantly on the East Coast, particularly in the Southeast. And there's a growing consensus among several firms that national house prices have hit rock bottom. As we transition into the fall market, traditionally a slower period even back in 2021, it's clear that the current rates are the primary handcuffs for potential buyers and sellers. Yet, with a potential rate decrease, we could see an upswing of transactions, possibly touching the 5 million homes per annual mark. Thank you for tuning in. If you're interested in diving deeper or seeking advice tailored to your situation, I'm here to help. Schedule a free, no obligation consultation by clicking the link below.